basically was everything you just mentioned, right? It's that in general, as a psychological trader, and part of trading is understanding human emotion and understanding that when the whole crowd, when every single person is rushing into an asset, that's usually the mark of a top. And you saw this, I mean, we saw this in 2007 with the housing market when Time Magazine featured like the flipper, the home flipper on their front page. It's exactly the same thing. I mean, when you have the mom and pop saying, hey, this is so easy, I can't believe how much money I'm making, it's usually the end of the move. And then you look at the charts and you understand the massive move that has gone on, the double top that we saw in Bitcoin, all the factors out there. To me, it was one of those no-brainer scenarios. Plus, let's not forget that by November, when Bitcoin was topping, we knew the Fed was going to start raising rates, right? We already saw inflation spiking, and everyone was saying, oh, like, listen, inflation's spiking, so Bitcoin has to go higher. But the essence of it is inflation spiking. Bitcoin was already factoring that in. Now it had to factor in the major tightening that the Fed was going to bring in. And remember, there was so much money that had been thrown into the Bitcoin market, from checks going to Americans from the government, from quantitative easing, from all the stimulus. People were home. They weren't driving to work, so they were saving on gas money. They weren't taking vacations, so they had extra money. So all that money was going into crypto or stocks. Now, all of a sudden, you get to a point where the Fed starts sucking out that liquidity, and there's really no other way for any assets to continue up, and we've seen that here. Bearish as I was when we were at 65 to 69,000, I would say I'm lukewarm now on Bitcoin. It doesn't mean I think the bottom is in, but you're right. Let's take a look at the chart of Bitcoin. This is something I want to show you guys. So here we have, this is the drop on the Terra Luna collapse. And we dropped from about 31,000 and change down to about 17 and change. And so that drop was about 40+%. Now, if you look at the collapse of FTX, Bitcoin only dropped 25%. And so you could argue that FTX was a much bigger blow up in terms of institutional money being involved and kind of the earthquake that it caused, yet Bitcoin dropped less. And so to me, I take that as a signal that says, okay, it's not the end yet, but we're getting there. And so a couple of the analysis points. So number one, I looked at the comparisons of FTX's blow up and the Lehman Brothers collapse in '08, noticing again, Lehman was a bank, it collapsed. An exchange, FTX, kind of like a bank, but in crypto, it collapsed. Now, how long did the S&P 500 take to bottom after Lehman Brothers? And the answer is it took about 6 months. So then extrapolate that out and say, okay, in 6 months from now, we might be seeing the bottom in Bitcoin. And the reason you can kind of extrapolate this out is because human emotion, you could say, oh, well, that's stocks, this is crypto, but the answer is it's all the same. And the reason it's the same is because humans, you and me, we're the buyers and sellers. And does your emotion change? Does my emotion change? No, greed and fear. It's what rules the market. So you can really extrapolate that out. And the last thing I'll say is the S&P, when Lehman collapsed, fell another 45% from that point, from that collapse, before it bottomed in March '09. In that case, we should see Bitcoin fall approximately 45% more from approximately that, breakdown level around 18,000 and change. To me, that gives me a target just below 10,000. And keep in mind that max pain is caused when even numbers are broken. You'll see a ton of stops run at 10,000. That could be the bottom when it breaks into the 9,000.
Just real quick about
is starting to get into that mode of being between the two, right? So I think what you're going to see, and this goes with the predictions, right, for 2023, where the NASDAQ and the S&P are going to continue down. But what I'm saying is Bitcoin's going to actually bottom out and actually start to turn up in 2023. So that means it has to decouple from risk assets. And the key to this is going to be regulation. As much as everyone hated the idea of regulation in crypto, now we see an FTX scenario and everyone's saying, all right, well, you need some transparency. You need audits. You need to see the books on these players. There has to be rules where they can't take customer funds and put it in other places. And I think that's going to be the key that really starts to trigger Bitcoin's next move up, is when you get regulation, institutions will finally start to come back to invest in Bitcoin. Right? Before, it wasn't popular with people. Now people have been burned so much that it's popular. That means the politicians will act. I don't think that you'll see necessarily it reverse. I think that as the stock market in the U.S., which has taken in more money than any stock market globally, any asset class globally in the past, really 13 years since 2009, as you start to see less returns being generated, money will have to go towards other markets, including gold, including Bitcoin, once you get regulation in Bitcoin. So I think that there's plenty of money there in a prolonged bear period for gold to thrive and Bitcoin to thrive. The only thing that matters for crypto is regulation. And again, you got to get that in there because again, you could be the biggest fan of Bitcoin. If institutional money doesn't come near it, it's never going to 100 or 200 or 500,000. It's the maturity of it. So I think what you can do is you can extrapolate that out. Look at the 2013 or 12 bull market, the 2017, and obviously the 2021, and you can look and see what those percentages were, and it probably will decrease. That would be a great way to figure out the potential target for it to go to. It's so important for us to not only look at our best case scenarios, but our worst case, what if we're wrong? How do we maneuver? How do we trade around our positions? And in essence is, if this was really the .com collapse, and let's say Bitcoin is the Amazon.com of the crypto markets, right. Amazon dropped 95%, which puts you back at 3,500, which happens to be the pivot low support from the last cycle low.
Okay.
22, we said gold would be Bitcoin and the S&P 500. I'm going to re-up. And I'm going to say gold will again outperform percentage-wise the S&P and Bitcoin. But I will make this further out prediction is after next year, Bitcoin will be the best performer going forward for multiple years.